Hi everyone, welcome to another training session from Homula Realty. Our goal is to educate the public and the real estate industry in regards to the latest news and updates in real estate and anything that affects real estate industry in Greater Toronto area and in general in all of Canada. Now today we're going to talk about a very interesting topic, which is the foreign buyer rules and regulations and the recent ban that was imposed by Canadian government. You know what? Government has to intervene in everything, and real estate is another aspect of it. Sometimes it does help the industry, but sometimes they're even stuck and they're confused about what they've done, and they try to make changes and modifications in order to fix the problem. So non-resident ban and speculation tax that was imposed by provinces. So let's start with talking about the provinces. Ontario and BC both have imposed a non-resident speculation tax in the last few years in order to stop the basically unusual growth of real estate market in the central cities of Toronto and Vancouver. Now, legislation to enable the NRST or non-resident speculation tax in Ontario was passed into law in June 1st of 2017. Initially, it was a 15% tax being paid by non-residents when they purchase a property, a residential property in Canada. This was introduced because in 2017 the prices were growing on daily basis, and the market was getting really hot. The Canadian residences, and especially Ontario residences living in Toronto, they were worried that they're never going to be able to afford a home. So the government intervened. The Ontario or provincial government introduced the tax, and they started charging people, non-residents that were purchasing a property, 15% tax. That slowed down the market a little bit, but there was a rush of non-residents purchases prior to the implementation of it. Once they released the news, that actually created a surge in the market. Now, in 2021, towards the end of 2021, we saw the same scenario and same issue. The prices were going up too fast. So the government of Ontario now decided that they're going to increase the tax to 20%. On March 30th of 2022, that came into effect, and people, non-residents that were buying properties in Ontario, they were paying 20% tax. Now, keep in mind that they also expanded the reach of this tax. Initially, when they introduced the tax in 2017, it only applied to GGS, or Golden Horseshoe region, in other words, which is a GTA and some of the surrounding cities, the larger cities that were in this area. Now, in 2022, on March 30th, 2022, they expanded it to all of Ontario. But this wasn't enough. They thought they haven't increased it enough, and just a few months after that they changed it to 25%. So in October 25th, 2022, this tax increased to 25% of purchase price. It means that if you buy $1 million home in Ontario, you have to pay $250,000 in taxes plus your land transfer tax. Now in BC, this tax was 20% and did not apply to all of BC. It's only in certain areas. Now, the tax affected individuals who are not Canadian citizens or permanent residences in Canada will apply to transactions where any purchase on the title includes a purchaser that is a foreigner. And this also applies even if there's only one non-resident on the title, meaning that if you got a few people that are purchasing a property and one of them is non-residents, you have to pay the whole tax. Now, also in terms of the corporations, if non-residents own the corporation, that also applies to that corporation when they purchase a property. Non-resident speculation tax extends to all the foreign corporations that are registered outside Canada, as well as Canadian corporations that are controlled by non-residents. And now, the control, that's a fine line. And even if you have a minor, basically, ownership in the company, you might get dinged with this tax. Now, there are some exceptions. First of all, the first exception is for nominee. What does nominee mean? Foreign nationals who are nominated under the Ontario Immigration Nominee Program. They must also certify that they will apply to become a Canadian permanent resident. Protected people, like refugee applicants or refugees, are also part of the exception. Also, spouse of Canadian residences are also exempted from this tax. So if you're a foreign national and your spouse is Canadian, then obviously you don't have to pay this tax. The foreign nationals must designate the home as their primary residence, meaning that you cannot buy an investment property and apply for an exception. Now, for people that do not qualify for an exception, but they might qualify in the future, there's a rebate program. The rebate program works for the following group of people. Number one is foreign nationals who became a permanent resident within 4 years of purchasing the property. They can qualify for this rebate and they can apply for this rebate. Also, the foreign students or international students that they register in Ontario University or a Canadian institute, as a matter of fact, not just Ontario, anywhere in Canada, they're exempted from this. The only catch is they have to be registered for at least 2 years following the date of purchase, meaning that they have to study for a period of 2 years. Then they can apply for the rebate and qualify for it. Now, foreign nationals that are also working in Ontario, they're also exempted from this. And a foreign national who legally works full-time in Ontario has to continuously work for a period of 1 year in order to qualify for this. Now, these homes have to be principal residence and they have to be basically used as a principal residence within 60 days of purchase. Meaning that if you buy a property and rent it out, you're not going to qualify for this rebate. Now, the property must exclusively be held by the qualifying foreign national or their spouse. So, if you have other people living in the house or they're controlling the property, then you might not qualify for this. There's also a time limit. From the time that you become a permanent resident, you have only 90 days to apply for this. So if you pass the deadline, then you might not qualify for the rebate. Keep in mind that I've seen cases where people don't really look into the rules and regulations, then they get into trouble. For instance, if you have a corporation and you purchase the property under corporation and then you personally later on become a landed immigrant, then you might get into complications in regards to applying for this rebate, okay? Because technically the rule doesn't apply to the corporation. Now, we're going to move forward to talk about another exception that applies, and that's for properties that have more than 6 units. So if you got more than 6 units in the property, whether it's a condo building or a multi-residential, then this rule does not apply. So if you're a big corporation and want to buy a big condominium building as a rental property, then or buy a rental building, then this rule does not apply and you don't have to pay that tax. Okay? All right. So let's talk about the federal ban that came into the picture starting January 1st, 2023. Remember, the tax that we discussed is a provincial tax that has to be paid. Now, the federal government, because of the increase in prices in Canada, which was getting out of hand, decided that they have to control the prices, because you know how it is. If the prices go up too much, then people cannot afford to buy a house. When the prices are high, the rents increase. When the rent is high, people can't afford, and then you have all sorts of other problems like homelessness, and the government had to intervene. So they started with this ban that they introduced, which is going to apply on January 1st, 2023, and the ban took effect on that date. Now, initially, it was a pretty tough ban. It was for 2 years, and it basically said the foreigners cannot buy a home in Canada. The Act defined residential property as buildings with 3 dwelling units or less. So if you had any type of home that had 3 units, whether it was a semi-detached or a condominium, doesn't matter, it qualified. If you had 4 or more units, then the ban did not apply to that, and the foreigners could buy those type of properties. Non-Canadians could purchase residential properties located outside the census metropolitan area as well. So if you are outside the major cities, then you could actually purchase a property. So this was an attempt to actually move the business from main cities to rural areas and encourage people to purchase properties in those areas. I just have to add something. The government also imposed a fine for people that either purchase a property that are non-residents or people that help non-residences purchase a property. The fine is $10,000, and also the court can force that property to be sold. Now, let's talk about some exceptions to this rule. Just like the Ontario and BC non-resident speculation tax, there are some exceptions to this rule, and there are people that do qualify to purchase even though they're non-residents. Number one is buyers whose spouse or common law partners are Canadian. So those people that marry a Canadian or permanent residents, they're able to purchase a property. Rental dwellings with 4 or more units are another exemption. Recreational properties like cabins and vacant land. Owners who acquire property from pre-2023 trusts, foreign nationals affected by death, divorce, or separation. So if you're a foreigner, you get a divorce, obviously you need a place to live, so you might be able to purchase property. Gifts of real property, meaning that if it's gifted to you, secured creditors, and as well as temporary residences who work or study in Canada and plan to stay. But the regulation was really tough. It required you years of working in Canada, and it was really hard to qualify. Also, foreign diplomats and consulars in embassies are exempted from this rule, and they can purchase a property. Obviously, we understand that refugees are always an exception to these type of rules, and people that are fleeing conflicts in the world. Now, government introduced the ban, and then there were some problems, because obviously, although the government wants to help people that are concerned about affordability, but real estate market is connected to a lot of different industries, and those people will be affected if prices change and there's no new development, and builders are not interested in developing new properties. So what happens is those people will lose business, and obviously our politicians like to keep everyone happy because they need our votes, right? So they introduced the ban, an amendment to this ban. The amendment was introduced in March 28, 2023. What does the amendment say? It's very interesting. Vacant lands that are zoned for residential or mixed use can be purchased by non-Canadians and they can develop them. So if you got a big corporation and you're coming here to Canada and you're buying big chunks of big pieces of land and you want to develop, not a problem, you can purchase. The new rule also increased the corporate foreign control threshold. Initially it was only 3%, they increased it to 10%. So if a corporation owned up to 10% of the shares by a non-Canadian person or corporation, they can still purchase Canadian properties, residential properties. Now, also, people that have a work permit in Canada, and that work permit is valid for more than 183 days. So you got a work permit, the work permit is valid, and there's still 183 days left from that work permit, then you can purchase a property. Now, funny thing is, along the same time frame, the government announced that if you have a visitor visa to Canada, you can easily extend those visitor visas, and on top of that, announced that a lot of people can actually apply for a work permit. So as long as you got a visitor visa to Canada and you're going around and looking at homes and you're interested to buy something, all you have to do is just apply for a work permit, and now you can qualify to purchase a home. So this new amendment made it a lot easier for foreign nationals to purchase properties in Canada. So it's like a step backwards from the government. Now that we introduce you to all these rules and regulations and bans and taxes by provincial and federal government, we're going to try to clarify it at the end for you, just to give you an indication of who can and who cannot buy a home in Canada. First of all, if you're a Canadian citizen or a permanent resident, not a problem. You can buy as many homes as you want. So, who cannot buy a home in Canada? Technically, non-residents are banned from buying a home in Canada. But let's look at the exceptions pretty quickly and wrap it up. Number one, if you're a corporation with less than 10% controlled by a foreign entity, you can buy a property in Canada. Also, if you're a refugee claimant with eligible claims, you're a diplomat or a consular of a foreign country, then you can purchase a property. Now, a couple of parentheses there. You do not have to pay Ontario non-resident speculation tax if you're one of these two groups, but you do not qualify for a first-time homebuyer rebate. If you don't know what first-time homebuyer rebate is, watch our other videos about first-time homebuyer rebate, and you're going to learn about the program and who qualifies for it. If you have a work permit with 183 days left and have not purchased more than one property, then you qualify, meaning that you can buy a home. When I say you have not purchased more than one property, it means that you cannot have another property in Canada. You can only buy one. Also, if you have a study permit with 244 days of the year living in Canada, and you have it for the past 5 years, and you also filed your taxes in Canada for the past 5 years, then you can purchase a property, but the maximum limit is $500,000. Now, good luck finding a $500,000 home in Toronto or Vancouver or major cities in Canada. The prices are a lot higher than that. Now, if you're one of these two groups, meaning that people with work permit or study permit, then you do have to pay the provincial non-resident speculation tax. So you got to pay 25% of the value. And also you do not qualify for the first-time homebuyer rebate. That's a wrap for our non-residence training. I hope you guys enjoyed it. Here at Homula, we try to make sure that we bring you the latest news and also make sure that you are educated when you're making a decision about your real estate purchase or sale. If you're interested to work with any of our team members, please call 416-495-4030 or email us at info@homula.com. See you till next video.